Microphone check and screen share check, please. Thank you for your patience. All right, so there was a question in the chat room today on, from Matt. A couple things. Is a frog quality number of 5 or 4 an even better frog candidate than 3? Or would you consider it more of a baseline filter? It's really one of the conditions. It's not even a filter. So what we want to talk about with frog candidates is that we're looking for something that's poised to make a large move. A large move tomorrow, relative to the size of the frog box. Now, when I say the frog box, we're talking about in Frog 1.0, the frog box itself, which is the standard deviation of the 30-day range. It's sort of a measure of volatility. What we want is a large intraday move that would have a number of frog boxes. And if we saw something like this, 1, 2, 3, 4, 5, and we had let price move off the low, and then we got an SSC or something right here, and then we could get 4 frog boxes compared to a 1 frog box of risk. In Frog version 1.0, we were using a full frog box as the signal, the first non-noise signal. We're looking for a non-noise signal. And our idea was that by using the frog box as the standard definition of a non-noise signal, that we would have seen price go to a low of the day and then reverse up. And then when it had moved a non-noise signal, then we had a reason to believe that price was going to move up. And then what we want to see is something like a range stat kind of a day, where you get multiples of frog boxes moving away from the low of the day. In Frog 2.0, and in sniper trading in general, what we have learned over the years is that we don't have to wait for the 100% certainty that this was a signal and not noise. What we've learned is that you can actually tolerate a move of about 0.3 or 0.4 of a frog box off the bottom, and then you can get an entry sooner. And now this little piece in here, the remainder of the frog box, instead of waiting for the 100% certainty, by that time you might actually be able to take your risk and move that above a frog box or something like that. And now you've actually locked in a no-lose plus dinner for 2 and taken your risk out by the time that the regular frog was just beginning to enter. Now, the beauty of this is that we know that Frog 1.0 is a positive expectancy system. So if you can reduce your risk box, then you're going to improve your R multiples. You're going to get in sooner. You'll get to no lose plus dinner for 2 sooner, and you can get larger R multiples. This insight was the beginning of the idea of the minimum manageable risk box, and why we want to compress that to the point where we're not taking larger than a 1 MMRB loss against us. That's where the our 10 factor comes in, because now we're taking the range stat and we're dividing that into 10 equal slices. And then instead of a full frog box, which is normally about 3 of those, we're getting an entry down here at about 1/3 of a frog box, and we're getting a 2-to-1 reward to risk just to the top of the frog box. So if you can manage that idea, what you're seeing is that you are reducing the relative you're increasing the reward to risk ratio. Now, I say all that simply to say that what we want in frog trading or intraday trading or sniper trading or RLCO trading intraday is candidates that are poised to make a large move. One of the ways that we first determined that in Frog 1.0 was a large frog quality number, because what that told you was that the average range, when divided into frog box increments, when it was better than 3-to-1, then a frog box move would give you a 2-to-1 reward to risk on a simple move to the average range. And if it moved to a range stat, you get an extra +1 frog box. So in our reasoning, if you had a frog quality number greater than 3, then you were sufficiently compressed so that an average move would give you a favorable trade-off. So that's one of the working definitions of a relatively large move tomorrow compared to the risk you want to take. But the real question that Matt's asking is, how do I find the best frog candidates? And I want to say, don't key in on the frog quality number as the thing that is differentiating. What we want are candidates that are poised to make a large move, and we know what those are. In the frog and day trading home study course, you'll see this chart and a little video on this, and I want to update it a little bit right now. So we said that all of these things give you a good frog candidate. Candidates to be good frog trades the next day. In other words, it's simply potential to make a larger than normal intraday move in either direction. That's actually the original idea behind the compound critical state. In which we have a critical state defined as the potential to make a larger than normal move in either direction in a shorter period of time. And the idea of the compound critical state is we can start stacking these things up, that if we now look at a 10-day look back, a 30-day look back, and a 150-day look back in the sniper, if these are all in critical states in each one of those lookbacks, we now have 3 different demographics that are all contriving and conspiring to make this a large potential move. So all of the sniper patterns, all of them, give you a compound critical state. And so I'm going to add any sniper setup is going to be a great frog candidate, which is just shorthand for saying these things are poised to make large, surprising moves. Not surprising to us, but surprising to all of the people in the various lookbacks that maybe don't have our tactical sense of what's going on in the market. So I will tell you what makes a good frog candidate: any sniper pattern, any frog quality number better than 3, because by definition, it is compressed to a relatively quiet state where an average move is going to give you a large multiple. Any symbol that has a high signal-to-noise ratio, in other words, greater than 0.5. Well, what do I mean by that? What I mean is that if you go back the last 30 days and you take a look at all of the daily candles, the real body of the candle is signal, and the tails are noise. Why? Because they couldn't hold that price It opened here and closed here after visiting the highs and the lows. So the real signal of the day is from the open to the close. That's how strong the signal was. And then the tails represent noise. So if you take the signal, which is the close minus the open, and then divide that by the range, which is from the high to the low, you get a number between 0 and 1. And it represents the percent of the daily price action that was signal rather than noise. You'll see that reflected in the daily report for our tactical symbol set and all over the TC2000 bundle, by the way, for thousands of symbols. What we want is something that has a high signal to noise ratio, all other things being equal, because that means it's making large intraday directional moves. So a price candle that looks like this, that opened at the low of the day and that did nothing but go straight up and closed at the high of the day, that would be 100% signal. It was all directional. There was no noise whatsoever. So if over the last 30 days it always did that, it would have a signal to noise ratio of 1.0. You can't get any better than that. Well, that's what we want, is we want things that have very directional behavior intraday, so that when we take our small risk box, that we have some expectation that it could have a large directional move, and that pays us off. So we would like to see, all other things being equal, a high signal to noise ratio. We would also like to see swing trades that signal at the start. Because why? Well, because the swing trade signal fires like on a 5-day down. You have 5 lower closes. And now suddenly this thing is poised, if it breaks out of yesterday's range, to make a strong directional move for the next, 3 to 5 days. When you see that kind of a swing signal, it means that if it starts moving up, guys are going to start buying this thing, and you're going to get a large move, and it'll probably be directional. So a swing trade signal that just fires tells you that you can have a directional bias with a larger than normal move in order to fix the price anomaly that generated the swing trade in the first place. 5DD says the sell-off was probably overdone, and it's going to try to run back to what was previously fair value. So you get larger directional moves. Those make great frog trades, not because the frog quality number is better, but just that it's poised to make a larger than normal move. An extreme trade location on the NDX10, and this was a precursor of our critical states for the sniper, was that if you look at the 10-day range, which is a perfect time frame for understanding swing trades, if you had something in the top 20%, so it's overbought, there's a good chance that the next day is a breakout or a reversion back to the mean. Either one of those is a move from a critical state based on location, and you get a large directional move. Same thing if it's oversold on that NDX10, you get either a large recovery or a collapsing dragon. So an extreme location on the NDX10 is an indication that tomorrow might be a good day. That's why you see me highlighting those in the daily report. I would now add to that a 30 and a 150, and now suddenly what do you have? Oh, you have the essential elements of a Godzilla. That's the very best definition of something poised to make a massive move. Well, if yesterday closed in a doji, that is sort of a range, and that I will combine that with max pain range compression. A doji simply says that the breakout from this compressed state could be a large bounce up or a collapse out of this period of tension. If you add to that the previous moves was a large directional move down, so maximum pain, now suddenly the combination of maximum pain and a little doji gives you an enormous change in psychology from fear and loathing of the big sell-off into a tightly compressed tug of war. That's such a huge difference in psychology that the move that comes out of the doji could be enormous to the upside or it could be large to the downside. So max pain range compression and a doji yesterday both lead you to the possibility of larger than normal moves. A just completed significant directional move. So if you see something like a leg one move up that terminates in a doji, we wouldn't be surprised to see leg two or a reversion to the mean. Preferably a doji, but a large significant move means it's in play, and now maybe the other side of the trade comes in, or maybe some additional buyers come in. So a larger than normal significant move. In other words, how about a Z5 score or a Z1 score that are extraordinary? Both of those are a good hypothesis for a continuation move. And then finally, if the market itself or the sector of the target that you're looking at, or if you're looking to trade the sector, if markets and sectors are poised in any of those, you're also going to have a broader effect for entire groups of stocks and ETFs and symbols. So all of these taken together, and more is better, all create candidates for good frog trades. So the frog quality number itself is simply one of those things. But what if you didn't have a good frog quality number? Well, if yesterday was a large move, or you've had a series of a couple really good moves in a row, it's very hard to get a large frog quality number because the increased range expands the standard deviation, and you'll never get frog quality numbers better than 3. But you can have all of these other things in play, and they would be great candidates for a frog trade. So I don't want you to think of the frog quality number as a screen or a filter. It's really just one more indicator that gives you some idea of the size of the average range compared to the volatility compression in the frog box. It's just one factor among many to find things that are poised to make larger than normal moves. So I wanted to answer that question because it is foundational to the way we're trading. And I want you to see that in the evolution of our ideas that Frog 1.0, in much the same way that RLCO 1.0 gave us a great start on our tactical frameworks, those things have been updated and improved on by second generation RLCO, things like the named patterns of the supported spring crossing and the owl and the Z3P and all that. This builds on the sound foundations of the RLCO, and that our sniper trading is an improvement over the frog because it reduces the size of the risk box, adds some additional patterns, and allows us to incorporate some of the other features of our tactical framework to give us more insight. Frog 1.0 was a minimum rule set that didn't include any discussion of support and resistance from the previous day. It was an effort to try to be information sparse and simply move off of price bars and a statistical definition of the difference between signal and noise. Just, in other words, to get out of your bias and in your interpretation, to simplify the rule set. And it's a positive expectancy system. It's just that these are better, especially the sniper. So I wanted to answer that for Matt because he asked me a good question and he's just getting started. All right, let's take a look at back to our regularly scheduled program here. Hopefully you found that helpful. All right. So here's the, we're looking at the 30-minute chart. Here's the boundary between yesterday and today. And today was just a continuation of yesterday's sell-off. It really just mucked around and then closed poorly at the low of the day. So a relatively small range, but a failure of price. And now we're really pushing that 10-day, 30-day, and 150-day low in the Godzilla, which we're going to see in a moment. So this was not an encouraging day whatsoever. The PSAR was pointing down all day and never really looked back. So we're poised for major collapse. However, the last time it visited here, There was a nice bump. So we're ready for a tactical trade because we're in the zero state and we have no expectations and we're ready to frame trades in both directions and not be surprised, particularly when we notice that all of the U.S. indexes are in a Godzilla pattern right now. That is a clear and present danger and a clear and present opportunity for those that can handle volatility. The daily charts with the 30-day look back, here's our 5-day, 10-day, 20-day, 30-day look back. You can see how right on the boundary of disaster this market is. Very small range day, however. It did not collapse. It did not give any indication of upside. The world is just mentally bruised right now, getting ready to go into a Thursday to see what is going on. So this is a perfect critical state. The absence of volatility makes it very quiet, which makes this the doji that we just said after a significant move, two significant moves down, and then ending in a doji right at an oversold condition on a support level that's ready to collapse or rebound. It does not get any better than this right now for tomorrow. So be ready. And in the larger look back, when we look at the 150, you can see just how painful this thing really is. Hovering right at that 150-day low. Just brutal. I want you to notice how large the volatility range is on that 5-day compared to how tightly compressed this thing was on its way up when it's in an upward grind. This gyration right in here is just driving people berserk. Not us, because we love the volatility, but you just need to recognize how on the edge this market is. We actually saw it 2 days ago go into bear volatile conditions. So that just tells you how desperate this market is becoming. Perfect trader's weather, though. All right, let's look at the sector performance. The S&P was the worst today, but it was only off 0.33, and it's in that volatile condition. So this is maybe a pause that refreshes, or it's the doji at the end of a long run that's going to set up either a large break out to the upside or the downside, and you want to follow it in either direction intraday only. I would not be taking swing trades on the long side until we get out of this hole. Everything was better, starting with the Russell was only down 0.27. Diamonds and tech were basically flat at off very fractional. Emerging markets was up a fraction at 0.12. Treasuries were up 0.5% and were able to nudge back across 100. Tesla was up 0.34. Finally had some recovery. So not much range between the S&P at minus 0.3 and emerging markets at 0.12. That's a compression in the indexes of less than 0.5%. So convergence and pain and suffering. This is a time for a steady hand and a clear trading plan. This is when you need a sniper, if I can be so bold. All right, let's look at the underperformers. Here again is the S&P, our baseline at 0.33. So you've got materials at 0.75. Agriculture, lumber, and Brazil down to 0.92. You got the VIX, real estate, oil, commercial real estate down to minus 1.2. So those were the defensive plays that yesterday were making money. Lost money today. So sector cycling. Lithium off 1.25. That was also a winner yesterday. So this is like a a change of leadership every single day, which is a working definition of chaos. You got uranium, clean energy, and marijuana off another 2.28. So these were things that were up yesterday with the exception of marijuana, and they all gave back today. All right, let's look to the upside. Oh, I'm sorry, individual companies. Texas Instruments down 1.25. Cliff Natural Resources, our steel company, down 1%. More tech and Nvidia in the semis. U.S. Steel off 0.62 and Apple down 0.46. So lots of disappointment around the board. The things that worked today, let's take a quick look. Oops, sorry. All right, so here's our baseline once more. S&P off 0.33. Here's the cut line between making money and losing money. All right, to the upside, tech, lumber, finance, blended commodities, up to scratch. The FANGs, consumer discretionary, and Mexico up 0.26. Aussie dollar up 0.5. Staples, agriculture, Arc Genomics, energy up to 0.81. Bitcoin, Ethereum, gold, oil exploration up to 1.18. Arc Innovation 1.3. And now individual companies. Alcoa, big winner of the day at 0.5. Squarespace, Robinhood, Devon Energy, big winner. Intel, a big winner. PayPal, a winner. Microsoft, marginal winner. And Rivian, a marginal winner. So a nice variety of winners today in tech, and then some of the supporting areas like energy. So the range compression today started to set everybody up for some big moves tomorrow coming out of this doji. So tomorrow's going to be a trader's delight, in my view. Let's take a look at sniper trade of the day. So we're looking at Devon Energy. So our first trade was this one. Here was the close. Here was the gap opening, which sold off. No, I'm sorry. It recovered, sold off, and closed here. So we set the OR3 right there. The second bar opened here and started to collapse, and then immediately reversed higher. We took our exit at the -1 standard risk box, which was right here. So we're at -1 for that trade. Check or hold? Then that price action took it higher. It rejected at the top of the dragon and then sold off to here. And at this price level, I'm short with a standard risk box like this. And I'm looking for it to get back to here. And if it can get below there, that's going to be even better. So reversing back to the short side. It mucks around, but can't really make, although it's even making newer lows, it then reverses hard, comes back up to the edge of the dragon, and I just say, you know what, I'm going to take that because I need to make a half an R to start buying back the R that I'm down. Check or hold. So I just want to start making bank and rebuilding my chip stack. It continues to the upside. and takes out the PSAR. So this is a money management stop, by the way. You get the RL10 reversal and the edge of the dragon. I just cash it, take it. Now you get the PSAR flip with a standard risk box, and that feels like an SSC. And now we would love to see this get above the dragon or above the peak of the RL10. Then it's ready to go. So this is just a tactical trade inside this space. And in the tactical trade, all I'm trying to do is get my risk out above my entry so that I can lock in some gains per SOP in this space in here. Check or hold. That's the only thing I'm trying to do in the tactical trade, is to get my risk out and get a little something something. I'm really wanting to see it get above this so it can go. Check or hold. All right, so here we are. And it sells off. Oh, excuse me. Long day. It can't get above that key price level, and I didn't get a chance to get, or didn't take the chance to get my risk out, and I ended up having to settle for a fractional loss. That really irritated. I thought that was poorly done. Then I was able to get back into the zero state, and when it broke down into here, I'm feeling that as a collapsing dragon. So now I'm into the collapsing dragon, and I take it at the edge of the dragon once more. So the maximum favorable excursion was down here. It was recovering. I decided to just cash it there and make, that's about a half an R. So I'm trying to fight my way back to even. I wait for the RL10 to cross the dragon, the extra confirmation, and then it hits the PSAR there. Standard risk. This is an SSC all day, supported spring crossing. Now it's starting to work, and it feels like, oh, okay, back in the saddle. What I like about this thing already is that we were able to get above that key resistance, which is what made it fail here. This was a place for a possible second position. And by that time, this is probably holding 2R. So in my brother's sniper strategy, the 2R battle drill to add would have triggered right about there. And that's not a bad idea. I'm just holding the one position. Because I don't have two positions on, I was able to tolerate that little bit of heat, and then it recovered. If I had put the second position on here, and I got up into here, right about here, I would have cut it so that the second position doesn't go negative, and then I could make bank on the first position here. Then when that R10 wiggles right around in here, I've got to re-enter one position, and I probably would have scratched. So that's a lot of activity for not any extra gain. And so, the other side of the strategy of the 2R battle drill add is that if I'm just using the PSAR anyway, I get a pretty relaxed entry and exit. And there's one, so that gives me 1, 2, almost 3R on that single position. Check or hold. Caught a 2 reentry. Standard exit. I didn't take this one because this was pretty stable, and I still had more than an R in hand. But I'm not offended if you take that exit. It's not much different than the R10, RL10 rolling over and taking the piece R here. Almost no functional difference. So this is about another R. Caught a 2 reentry, quick scratch, and that took us in for the rest of the day. So we probably ended up with about +3 on this one by the time everything was said and done. All right, let's take a look at the traders today. Let me get Matt's other question answered while I'm at it here, because we actually saw that in here. He's practicing the RL10s, and you'll see this in the foundations course and in the advanced day trading course, and a lot of the we cover this extensively in the FAQs also. That he's talking about when the RL10 crosses, like the upper skin of the dragon. Are we referring to the moment the RL10 crosses, or once it is closed across? Closed across, because it doesn't finish painting until the close. Because you would see the as price was moving up and down, this little the end of the RL10 could be flickering among all those positions while it's waiting to close. Then when it closes, then you'll get the exact place where it closes. Now, one of the things that we have agreed to do is to treat the PSAR, as the trigger for those upside moves. So the PSAR in a declining channel will be north. Whoops, that should be orange. I'm sorry. Is going to be north of the dragon because of math. All right. So you might see that kind of a pattern. And you would see price bars that had bottomed out and start to move up. And then you would see the RL10, which tracks that pretty closely, looks something like this, and it might be right about here. Now, this crucial, let me finish drawing some of those in there. Hold on. So that we're even with the PSAR now. So now if you were to have the RL10 right around in here, the price level that triggers the entry would be that dot. Now that dot doesn't draw, and the RL10 doesn't draw until the bar closes. Now in an orderly world, you would have price just moves in an orderly fashion, and it crosses the PSAR where it crosses, and the PSAR flips, and the RL10 is right there with it. So somewhere in there you get an orderly PSAR flip, and then a PSAR flips to here because it comes down to where the RL10 was, and then hopefully it starts cruising up. But what we've seen is that quite often there will be somewhere in this area, somewhere in that area, there can be a price action that just shoots up in a hurry, and you get price taken off, and it crushes through the PSAR, and it leaves the RL10 behind, and you could be 2 or 3 or 4 bars late. So one of the things that we've just decided to do is to just accept the fact that as long as you're getting an entry around this location, you have a nice buffer in either the bottom of the dragon or the bottom of the RL10, and that you can go ahead and take this entry when price goes through it. Price goes through it in a great big spike, and we just take it. One of the refinements that we've done is to say, while price is monkeying around waiting for the bar to close, we go to the previous PSAR dot, the PSAR dot -1, and just draw a limit order right there, so that while this PSAR dot is waiting to print and the RL10 is waiting to print, we have something like a descending limit orders each time it updates until such time as price blasts through that, and then we get the entry at that level. What that prevents is you getting 2 or 3 really big bars that close up here, and then the RL10 finally crosses, and then you enter after the enormous move. So, in order to protect against that kind of rocket ship and then getting in too late, we've just decided that it's probably okay to just take when the price goes through the PSAR, you're good to go. A lot of times, what is happening is that the RL10 is crossing the upper skin of the dragon about that same time anyway. So I like to watch the price hitting the PSAR or the PSAR -1. Just hold my nose and buy it, and then have a wide risk box, and you're good to go. The fractional difference isn't worth the regret of watching this thing take off while you're waiting for the PSAR to flip. So I just take it when price crashes through there. You'll see some more discussions of that in the FAQs in the day trading course and in the foundations. But that's our current feel for that. 2 very good questions. So thanks to Matt. All right. Let's go to the daily reports. Excuse me. Dashboard number 1. All right, back into pain and suffering here with market dramatically oversold in bare normal conditions with abnormal volatility. No surprises whatsoever. McDonald's, Merck, Caterpillar in the min pains. Tesla, Microsoft, Nike, Intel. The losers continue to lose. In the tail of the tape here for the Dow 30 tactical summary. Plus, we've added some non-Dow 30s in there that we like to trade as individual stocks. So lots of dojis today on the doji day of the market itself. Lots of auto framers as far as the eye can see. You see a 5DD in American Express with a 2.9 to 1. Cisco with a 3.3 in a 5DD. Visa and Verizon. So these are all those valid swing trades with favorable reward to risk ratios. On a day when the market compressed, this just might be a one-day pop. I noticed there were 2 symbols, Verizon and Cisco, that had collapses today. So all things being equal, they're going to be in the highest states of agitation and therefore most likely to have large surprising moves. And the rebound in them would be the most surprising because everybody that owns them is suffering and they're imagining more pain. That makes some interesting candidates. In the ETFs, lots of dojis, almost everything on the auto framer. Only one breakdown today in even utilities aren't safe as protection against chaos and volatility. So that should challenge your beliefs about what utilities do. The yield on them's got to start looking pretty good right about now. That makes them interesting for that reason. I would expect there to be some buying pressure in the utilities pretty soon for people that are chasing yields. Just about everything on an auto framer now, not surprising because of the amazingly compressed range today, so that makes everything good. Tesla number one in the max pain range compression there, so that's all you need to know. Tech, Microsoft, and the S&P also in the top 10. Lots of squeezes today, including the S&P itself, Brazil, diamonds, and Tesla's fairly squeezed. But man, when the S&P itself is the most squeezed and it's in a Godzilla, man, this if you were just to draw that as a concept chart, you would say, man, the S&P is down 25%. And yet somehow at the bottom of this trail of tears, it compressed into a tiny little doji, which if we just bracket that and are able to trade the breakout from that zero state, mentally I got to be in a zero state ready to go long or short. Long on a recovery back to some measured level of resistance, or a collapsing dragon on the short side and expect to see another 5% sell-off. So that's what that number should tell you, those patterns. All right, we'll go to the snipers. There's just, it's a buyer's market here, all of these Godzillas. I tend to prefer the ones that are green and green, as I said yesterday. Our tactical symbol set, take a look at the names that are in this catastrophic Godzilla. Microsoft, S&P Tech, emerging markets, NASDAQ, NVIDIA and Intel, U.S. real estate, the S&P, the market itself, and Ethereum. Man, that is just a buyer's delight, or a short seller's delight, depending on which way Godzilla wants to break. This is tremendous opportunity. The one-day movers, there's some significant, surprising moves. Anything north of like 2 to 1, those should all be on your short list. VLO is Valero Energy, great big one-day move. And then I'm more interested right now in the volatiles because of the bear. Those kinds of things stand out to me. Autoframer stats for the tactical set. Standard sniper stats for the tactical set as well. We're starting to see a few things creeping into the summer, but they tend to be, the defensive plays and the cyclics like Brazil continues to amaze. But a significant number of stocks in the winter still. Fewer breakdowns today than you might have expected, and then a little bit of joy here in Cliff and Cat, in Mexico and Brazil. That's everything I want to look at on the daily. Let's see if we can see where the boys are. I had to reset this, so just a moment while we get this. All right, quick look at Tim's work here today. Some very professional work as usual. Kenneth, what did you do here? Sorry, we're looking at Tim's work. All right, so he starts trading here. I'd like to have seen him catching this at the VWAP break and below the collapsing dragon. As he misses the first one, but gets the second one, which I would treat reasonably as a collapsing dragon. Gets paid quick. There's another one right there that you got to get that on the second leg down. He does get this as it emerges out of the dragon, and he's trying to play this one. Gets a scratch, tries the long with a scratch, gets the short. Maybe gave back a little too much here. Couple short loss and then a short payoff. So 1.1R, back to his winning ways. Starting to build some good momentum. Nolan's working here on the Aussie dollar on the threes. Our experience is that might be a little too fast. We were liking the 5-minute Aussies. This is if you're playing Kata 2, you can enter here and then get paid somewhere in here and either take that exit at the dragon or this exit at the dragon, and you get paid a little bit instead of losing a little bit. This move here is I would treat that as a Kata 2. That's a good exit. This should be a stop and reverse. Now, when you get that much in hand with a wrist box or something like that, or even, let's see, where's the R10 that you have? Yeah, your R10 is here. You get more than one R in hand, and this thing reverses, and we only keep a little bit. That's painful to your psychology. So when you get a gain like this, which finds support exactly where you would expect it to find support, you got to look at that and say, you know what, I'm gonna make bank like right here, rather than here. Then when this rolls over, you can be short again right there, because this whole thing is rolled over. The PSAR never budged. The dragon's down. Price rejected and comes out of the dragon. Crush it short right there, and now you get paid to that maximum excursion. And then this, instead of getting short here, on this rebound, you could be cashing, and then you'd cash a winning trade. SSC flip, good scratch. I'd like to make that a no-lose plus dinner for 2. And then this, you might have had a chance in here to get a little payday. So some work to be done with money management and more rapid reversals of direction. It almost feels like you're expecting the trade to work and have a directional bias. All right, this is the NAS on 3 minutes. PSAR flip, that's an SSC. Could have entered here. That's not an unreasonable entry. You got a little fraction. As soon as that reverses, you could get long there, and then you'd have this move in hand, and then cash that one, so you might have been able to pick that up a little more. I like the PSAR flip here, generally speaking. The collapsing dragon is fine right here. You had this much of a maximum favorable excursion and let it scratch. So let's try to keep a no-lose plus dinner for 2. This is an example of that where price races up and hits it and then starts selling off. I like the exit right here rather than here. I'd probably try to get short there and end up probably scratching here. This is a pretty good SSC right about here or here. If that's a scratch after a favorable excursion of about 1. So when you get to 1R, if we can keep half, that's pretty good. Or when you get 1R in hand, take the dragon exit. And then this is a re-entry right here, and that gets paid. Here's a standard PSAR flip and a VWAP collapse, so there's some room on that trade as well. So you're getting some stick time. Remember, it's going to take between 600 and 1,000 trades before you have totally got all this stuff coded in your DNA. It just takes some time, but you're on the path. Woj with Devon. PSAR flip, we should be short here and exiting about here. We should be long here and scratching here, short here and cashing that instead of getting short here. You got a lower highs and a collapse, you can get short right there. This is a great long side trade. This is a nice discipline on the risk box, um, and pretty good exit at the PSAR flip. I think there was more to be gained here, a little too choppy. Tesla, same thing. Flip. Uh, let's see okay, there's the OR3. You got short and reversed. Took a full R loss. Take half. When this rolls over, I like the long and the quick exit. Then you can be short here, and then you should be able to cash that whole thing. And then an SSC might have been available. So I think we gave back too much in there. Let's see here. I had one more chart from you, I think. Where was that other chart? This one here. Yep. Here was some good work in XRP. Short. Maximum favorable excursion. If this is 0.3, then that's probably +2. We got to get more out of that than that. Harsh winter, SSC, gets a reasonable entry. Now here, we gave back half. When you get that, that's going to be a dragon horn, especially when that thing opens lower than the close and just immediately starts selling off. Cut it, get paid an extra R. This short, I think this was late. I would rather get it in here at the edge of the dragon. That's a pretty good breakout. That's very good patience waiting for the breakout out of the chop and then getting paid a little taste. So that's made some nice recoveries in there. Salvaged part of that day. All right, that's everything we got for today. Great meeting with the Chamber of Commerce today, offering our services to the community and to help them with leadership across the board. And I completed my chapter in the True Storytelling Handbook. It's going to press. As soon as that gets finalized, we'll get that distributed for your use. Very handy set of skills. All right, that's everything I got for us today. Running on empty. We'll be ready for them tomorrow. Tomorrow's the day. It's moving hard. Tomorrow is the trader's day. Absolutely. All right, take good care, and we shall see you in the chat room tomorrow.